There are numerous ways to monitor the markets, but conventionally the market watch is the first point of reference. It's quite a powerful window, yet the majority of its real value is hidden. Let's use the standard toolbar market watch icon to open up the default setup. The display heading not only titles the market watch, but signposts the current time for us. This time, though, does not correlate to our local time, but rather the time where the MetaTrader server is hosted. Here, it is hosted in Turkey, and the time happens to be 1 hour ahead of us, so at this point, our time was around 5 o'clock. However, depending on where you are situated around the world, this will obviously differ quite significantly. The time differences don't have much of an impact on our trading, other than certain technical indicators, but we've developed awesome automatic trading tools which will overcome these instances. But we are quite a long way off from getting into that at this point. For now, just know that when we refer to the close and the open of the day, we are making mention to the close and open in reference to this time. In other words, MetaTrader time, not our local time. We also specifically left this platform on for one whole day, running up to the end of our day, just to show you that the platform data ran up and consumed around 1,578 kilobytes. But take into account that we have very little loaded on the system currently. As we start adding elements to the platform, our usage will rise, but in the context of modern day bandwidth, it's still quite a small number, no matter how large our setup becomes. Awesome. So in terms of the default columns that are currently displayed on the market watch, the very first one is the symbol. Our first symbol currently is the euro-dollar, and by placing our mouse over any given instrument pair, the full name will be displayed. Before we carry on, we just need to make a comment that we will be using the words instruments, pairs, and parities interchangeably. We can't just use currency pairs because, as you know, we have the option to also trade heavy metals, such as gold and silver, against currency pairs like the dollar. So remember, the arrow on the very left of each parity is simply an indication of whether the current quote is higher or lower than the previous. A red arrow means that the current quote is lower than the previous quote, and a green one indeed signposts that the current quote is higher than the previous one. Don't read too much into these changing arrows. The middle column denotes the bid price. Don't fail to recall that the bid price means the buy price for the counterparty. Thus, we should know that the bid price is the price that we would be selling at. So at the moment, Euro's bid price is 1.4443, and this is the price that we would offer to sell this parity at. The last column in the market watch then represents the ask or offer price, and we would buy the euro-dollar parity from the offer of our counterparty at 1.4445. Of course, we know that the difference between the ask and bid price is the spread, and in our trading platform, the spreads will always be fixed. It's imperative enough to restate that not all instrument pairs have the same spread, and we encourage you to trade those pairs that are tightest, meaning, well, the smallest spreads, which we know to have the most trading volume, the highest liquidity, and the best trading execution. Smooth entry and exit, that's really key. Heavy metals are slightly different, and we will address this detail in future. But in currency terms, here we see the euro-dollar and the dollar-yen having the tightest of spread at 3 pips. So we absolutely love to trade these. They're also very technically accurate for the majority of the time, which is vital to our trading. But we also like trading the Swissy and the Euro-Yen cross. And there's only a 4 pip spread, so it's acceptable to trade. 1 pip difference in spread may not sound like much for one trade, but imagine doing hundreds of trades over an entire year. A pip spread may actually play a big role in the overall return. As a beginner, we don't really advise that you trade currency pairs with a spread of more than 4 pips. Well, for example, the Australian dollar New Zealand dollar pair. Here, the spread is 13 pips, which means you would have to see the market price move 13 pips before you can break even and begin to make money. That's a bit too hectic for us and not very prudent from a risk-reward perspective in our opinion. It's not to say that professionals don't test and play all sorts of parodies, but there is no need to, well, just experiment if you're just starting out. Actually, there's no need to experiment at all. Weird crosses and exotics are simply always more expensive and more risky, well, liquidity-wise. So why trade them? Investigate the rest for yourself and slowly familiarize with the various instrument pairs' spread differences. Now, the true power of using the market watch comes into play when we right-click anywhere within the window. There are plenty of functions and commands here, so we need to take bite-sized chunks and deal with one at a time over the duration of the next few video sessions. The first command is placing a new order with the very essential shortcut of F9, and is really the same command as we can see in the standard toolbar. This window is the heart of placing trades nonetheless, but we're just gonna introduce it now, so let's click on it and see what it looks like. Well, we won't discuss anything right now regarding this vital window except one feature that will re-emphasize our discussion on bid and ask prices. Can you see that in the orders window, the sell button is on the left-hand side? Why? That seems strange. Well, no. And for the reason that we now know that the bid price is actually our sell price. Using the same reasoning then, the buy button is on the right because it's making a reference to the ask price, which is the price we will get when we want to buy any particular pair. Great, we can now close down the order window and continue with the next command being the chart window. It's the very same as in the standard toolbar, and we can kind of have a basic idea of how to open up a chart, so it's not really necessary to repeat that here. The tick chart, on the other hand, is an interesting command in itself. The shortcut is the spacebar, so let's use that here to bring up the tick chart. A tick chart is the smallest increment chart that one finds in trading and really displays tick for tick price movements, or as said in another way, quote for quote. Remember all the red and green arrows moving up and down? Well, here we have a record of the past number of quotes. We can never really find any meaningful direction from such a chart, but still, professionals sometimes use it just as they are about to enter or exit the market to pinpoint a good price. We can also confirm the current bid prices here. Right now the euro is sitting on a 1.4439 bid, and out of interest, this is the only place to find a tick chart on MetaTrader. And to reflect this point, let's quickly jump to a future video just to confirm that the smallest chart that is available on the charts bar is a 1-minute chart. You don't have to know exactly what a 1-minute time frame chart means right now, but at least we have established that a tick chart is only available as a page within the Market Watch window. From the tick chart, we can see the current bid prices jumping around, which is the same price as on the symbols page. To get there again is either as simple as re-clicking the spacebar or simply clicking the symbols page here to return. At this time, we see all the defaulted instruments on display within the Market Watch, but we have the ability to hide any of them should we wish. Although the shortcut for this command is delete, we don't really delete it, we sort of just hide it from view. As we have the euro highlighted in blue, clicking this now will hide the euro parity, which at this instant places the yen on the top of the list. Should we want to hide all the instruments from view, we can easily do so by clicking the Hide All command. Right-clicking on any of the white spaces within the Market Watch window will change the function page slightly, as there are no longer any pairs viewable, but we have the option from here to show all. And by all, we mean absolutely every parity that is available on the system to trade, which previously was not displayed. So here now, under gold, we have all the contracts for difference, or CFDs, that can be traded. These are not pairs as such, and they're quite different to trade, but we won't be dealing with CFDs until the very end of our course, so now we can simply use the delete shortcut and remove all of them from view. And that's it for now. We still have many commands inside the Market Watch to discuss, but we'll leave them for when we return.